welcome back, everybody. Right now, it's time for today's Squawk Picks, and joining us to talk about a few names to watch is Chris Cordaro. He is Chief Investment Officer at Regent Atlantic. And Chris, thanks for being here today.
Thanks.
You've got some picks that all have a little bit of a consumer angle to them. And while a lot of people are saying retail is just a place to run and hide from, you like a retailer. You like Target.
I like Target because I don't think retail is a place to run and hide from. We're still going to need to go to the big box retailers and fill up a cart full of junk that we never thought we needed, right? We just went for one thing, but we ended up with a whole cart. That's still going to happen. So if you can buy a retailer at a good valuation like Target, paying a nice dividend yield, and I think they've also figured out how to do big box and online at the same time.
Is that the key? You have to have both strategies?
Yeah, I think you need both strategies. You can't be one or the other. Consumers want the convenience of both, and they want the brand of both, because there's just times when online alone doesn't do it for you. You just need to run out on a Saturday morning and get stuff.
You know, I find myself, we were talking about this morning in makeup. I used to go to Target and I'd spend $400 on stuff I didn't realize I needed until I walked out of there. You don't do that online. I don't spend quite as much money. Does that matter in this equation?
Well, yeah. Well, that's where I think Target has the edge, right? Because when you go online, you're a sniper. You know exactly what you want, and you're gonna get it. When you go into a big box retailer like Target, you're walking through the aisles and you're seeing stuff tangible that you need right then, and your kids are throwing stuff in the cart as well. So they end up spending more money when you go to a retail presence than an online presence.
All right. You also like Royal Dutch Shell, despite the fact that we've seen oil prices come under pressure.
I think oil prices are under pressure, but for an energy company, you want one that can survive during low energy prices, and Shell is one of those. So I think Shell also pays a nice dividend yield, and what I think you're going to see with both Target and Shell that pay good dividend yields is, as interest rates start to decline, these dividend yields are going to become much more attractive. And I think you're going to see investors start rotating back into higher dividend yielding stocks.
Either of these stocks, how do they fare if we do head into a recession? If you look at the 10-year, if you look at oil prices, if you look at some of the latest economic news we've seen, if you look at corporate bonds, maybe you start to worry about the idea of a downturn coming. What happens to these two stocks in that scenario?
I mean, Target's a good example. If you think about a downturn coming, if a downturn's coming, you're going to be looking for places where you can get bargains, and Target's a place where you're getting bargains. I also look at it in a downturn. We're all thinking about the last recession. The last recession was horrible. We haven't had sort of a normal recession in a long time. In a normal recession, which I think if we slow down into, that's what we get, Target, Shell will do well.
The other stock that you like is Alphabet, but you say you are a little conflicted about recommending it.
I'm conflicted because at heart I'm a value guy. So when I look at companies and I know that that in a balanced portfolio I need to add some technology stocks to it, I've got to pick one that I think has a franchise and sells at a good price, and that's Alphabet. I mean, I think the place on the online advertising. They've got that end figured out, and they're well priced for it. So it's a really good technology stock to own.
You would not recommend the other FANG stocks?
The FANG stock I'd stay away the most from is Amazon. I think at some point they get their comeuppance when they realize, when are they going to be really profitable? I mean, they had a nice quarter last quarter, but when are they really going to get there?